U.S. gas common fee tops $5 according to gallon in ancient first. The charge of U.S. gasoline averaged more than $5 a gallon for the primary time on Saturday, records from the AAA confirmed, extending a surge in fuel expenses. This is riding rising inflation. The country-wide common price for everyday unleaded fuel rose to $5.004 a gallon on June 11 from $4.986 an afternoon earlier, AAA facts confirmed. High fuel expenses are a headache for President Joe Biden and congressional Democrats as they conflict to keep their slender control of Congress with midterm elections coming up in November. Biden has pulled on severe levers to try to lower prices, which include a record release of barrels from U.S. strategic reserves, waivers on regulations for generating summer season fuel, and leaning on foremost OPEC nations to reinforce output. Yet gas costs have been surging around the world due to a combination of rebounding demand, sanctions on oil manufacturer Russia after its invasion of Ukraine, and a squeeze on refining ability. Demand destruction's road journey, however, has remained quite sturdy, just multiple percentage points beneath pre-pandemic stages, while prices have risen. Still, economists expect call for may additionally start to decline if charges continue to be above $5 a barrel for a sustained period. The $5 degree is wherein we should see very heavy amounts of gas demand destruction, stated Reed Lonson, senior economist at Kepler. Adjusting for inflation, the U.S. fuel common remains approximately 8% under June 2008 highs, round $5.41 a gallon, according to U.S. Energy Department figures. Consumer spending has thus far remained resilient in spite of inflation jogging at its maximum degree in more than 4 decades, with household stability sheets shored up through pandemic alleviation packages and a tight job market that has fueled robust wage gains, specifically for lower-income people. Gasoline product provided, a proxy for call for, became 9.2 million barrels in line with day closing week, in step with the U.S. Energy Information Administration, extensively in step with 5-year seasonal averages. The excessive prices for drivers come as major oil and gas businesses put up bumper earnings. Shell, LON, RDSA, mentioned a report region in May, and Chevron Corp, NYSE, CVX, and BP, NYSE, BP, have published their first rate numbers in a decade. Other majors, together with ExxonMobil, NYSE, XOM, and Total Energies, as well as U.S. unbiased shale operators, reported strong figures that have spurred share repurchases and dividend investments. Numerous businesses have said they will avoid excessive investment to boost output because of traders wants to keep the road on spending, rather than reply to $100 plus barrel costs which have endured for months. Refiners were suffering to rebuild inventories which have dwindled, in particular on the U.S. East Coast, reflecting exports to Europe in which buyers are weaning themselves off of Russian oil. Currently, refiners are making use of approximately 94% in their ability, however universal U.S. refining capability has fallen, with at the least 5 oil processing flora shutting throughout the pandemic. That has left the USA structurally quick of refining capability for the primary time in decades, analysts said.